61, powered by Vantage TV by Frontier.
Matt, as we inch toward the new year, while it may seem easier just to simply push off those financial plans, there are a number of financial moves that you can make right now before January 1st. So joining us this morning is Denis Horrigan of the Connecticut Wealth Management. Thank you so much for being with us.
Thanks, Amanda. Good morning.
What are some of the things that we have already seen, maybe when it comes to the stock market and where we should go from here?
Yeah, I'll give you a few ideas, things that you might want to consider doing before year end. One is rebalancing a portfolio. 2 is managing your taxes, and 3 is be thoughtful about the way you give to charity. So that first one, rebalancing. So, you made a good point. The stock market has been on a tear this year. The U.S. stock market is up 22%. Foreign stock markets are up even more. The bond market in the United States, it's done okay. It's up about 4%. So there's this concept of asset allocation, which is the ratio you have in stocks and bonds. And if you started the year with a 60% allocation to stocks and a 40% allocation to bonds, stocks have done so much better that here we are at the end of the year, and you may find yourself with a portfolio that unintentionally has a lot more risk than it started the year at. So you might want to take a minute, take a look at your investments, and consider rebalancing to get back to where you started the year. But be careful, because if you do that, you might incur some capital gains. You may actually want to wait until January, when tax rates potentially will be lower.
Interesting. And when we talk about looking at your portfolio, this is also just things simply as your 401k at work.
Yeah, absolutely. I mean, it's one big portfolio, right? It's the Rouse portfolio.
Right.
You want to look at the whole thing, and you want to make decisions that really are going to minimize your tax liability. So I mentioned capital gains. Stock market has been so strong this year. If you've sold anything, you probably have a capital gain. And if you have mutual funds in December typically push out capital gains. They make capital gain distributions. So what we would suggest is, again, take a look at your portfolio and see if you have anything that actually is at a loss, that's worth less than you originally paid for it, and consider selling that. Harvest that loss, put it in your pocket. You can use it against any gains that you have realized earlier in the year. It will minimize your taxes. If you really like that investment, you can always buy it back in 31 days. There's no problem with that. We want gains, absolutely, but we want you to have gains and pay the least amount of taxes possible.
Yeah, because, the tax situation is just going to be a little bit, difficult to maneuver if we see today when that vote's going to happen on tax reform, if we see that move through. Yeah,
it's very tricky. And all of these things, you really want to consult with either your financial planner or an accountant to help them guide you through what you should do and when you should do it.
And really quick, because we're out of time, but you had said be charitable as well.
Yeah, so charity is always a great thing. Most of charitable donations happen in December. 30% happen in December. A lot of people write checks, which is great. Writing a check to a charity is great, but if you're giving more than $500 or $1,000 to a charity, consider giving an appreciated security. Don't write a check. Give them an appreciated security. The charity can sell that stock, not pay taxes. You win, the charity wins. The only one that loses is, unfortunately, the IRS.
Okay, Denis, thank you so much.
Thanks,
Appreciate it. Still ahead for you on the Fox 61 Morning News. Moments around the holiday.